Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. Because we get everything you need to know in 90 seconds at 9 o'clock with news. Fed boss Powell gave a hint at his Jackson Hole speech that weaker American labour market conditions may trump inflation risks when they next meet in 3 weeks, and a rate cut is a live possibility. But before that, Thursday New Zealand time, the market darling Nvidia is set to report its results, and any variation from what is expected to be a stellar result or any slackening of their outlook indications could very well have ripple effects on how investors judge their overall current sky-high valuations across the whole equities landscape. It's a huge immediate risk point. In Canada, retail sales in June were 6.5% higher than a year ago, the best rise since the pandemic recovery period in 2022. But some of that is just higher prices flowing through from their tariff dispute with the US, and a small correctional dip is expected in the July data. And the Canadians, though, are not ignoring the inflation risks of tariffs. To keep a lid on these inflationary effects of that dispute, Canada said it will roll back some of its retaliatory tariffs on the US. But the US isn't doing the same, so their consumers will still pay the extra on imports. Across the Pacific, China reported more ugly foreign direct investment data over the weekend. While it didn't actually shrink like it did in April and June, it is running 13% below year-ago levels, and less than half the July year-to-date levels of 2022 and 2023, and down 7.3% from last year. The June to July gain this year, while welcome, isn't anything more than a statistical blip in the context of the fall away over the past 4 years. And there was a surprising dip in Japanese inflation in July. It eased to 3.1% from 3.3% in the previous month, the lowest reading since November 2024. Helping was that electricity prices fell for the first time since April 2024. But food prices jumped 7.6%, the most since February. Again, rice was the big culprit there. The US Treasury 10-year yield is now at 4.26%, essentially unchanged from Saturday at this time, but down 6 basis points for the week. And Wall Street roared back on Friday, with the S&P 500 up 1.5% after the Powell hint of a rate cut next month. That means it's able to claim a 0.4% advance for the week, which pushed it to a new record high. And the price of gold will start today at $3,370 an ounce, down $1 from Saturday, up $36 for the week. And American oil prices have held at just under $64 a barrel, while the international Brent price is just under $68 a barrel. These levels are more than $1 higher than a week ago. And the Kiwi dollar is now just on 58.7 US cents, unchanged from Saturday at this time. Against the Aussie, we're holding at 90.4 Australian cents. Against the euro, we're unchanged too at 50.1 euro cents. That all means our trade-weighted index starts today at just under 66.3, little change from Saturday, but down 60 basis points for the week. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.